Hi everyone, in this new video I'm going to show you investments that I make into high yield dividend ETFs using the European ETF funds. Because I'm not based in the US and I'm not able to buy the US funds. I hope you like the video and find it useful if you're looking yourself to buy high yield ETFs, whether you are in the US or in Europe or anywhere in the world. So welcome to the channel and I hope you enjoy. Basically, when I do my research on the dividend high yield ETFs, I go on this website called Just ETF and I go on their screener page. And in that screener page, what I do usually is I look for funds that are bigger than 100 million euros and I then sort by the dividend yield. Here, for example, you see that the first fund that comes into my screen is the Global X Nasdaq 100 Covered Call UCITS ETF. If you're not familiar with covered call ETFs, they are basically ETFs whose analysts and traders basically buy stocks in general and sometimes bonds. But for the stocks portion, the traders sell covered calls and they could be in the money, they could be at the money, or they could be out of the money. And based on the strategy that the fund sets for the ETF, you can have dividend yields that can range from 5% all the way up to 30% if the strategy is very aggressive. Here, for example, this Global X Nasdaq 100 covered call ETF has yielded 11.85% in 2024. And this is due, of course, to the high increase of the Nasdaq in that year. But the flip side is that the 1 year change in this ETF price is only 1.82%. So the first thing that I have learned when investing in high yield ETFs is that there is a trade-off to make between the price of the ETF, of a unit of the ETF, and the dividend yield. And if I click on this ETF, for example, it's called Kyle. It was created in 2022, fund size 454 million euros. It has had a pretty decent performance, went all the way up to 50% since inception in January of 2025, February 2025, and has decreased ever since. So it's a pretty young ETF, but what I do usually is I really look into the historical share price of the ETF and I find a balance between to find ETFs that increase by a fair amount, at least 7% every year on average on a CAGR basis since inception, and a dividend yield that is higher than 5% ideally. Another example I can show you is the second one. So this again from Global X, the Super Dividend UCITS ETF. This time, what you can see is that this ETF that was created in 2022 with a size of 400 million euros has really not performed in terms of ETF price. It has more often been in the range of minus 15 to 30%, and it has never been positive since inception. But the flip side is that the dividend yield is pretty high at 9.71%. So this is the risk that we are taking when we invest in high yield ETFs. That distributed dividend is that the share price may be declining over time, which means that the net asset value, basically when you sum the dividends received and the value of the investment after X amount of years, can be threatened, and in some extreme cases can even decrease overall, which means that the dividends that you would have received from the ETF may not compensate the loss of the share price of the ETF. So this is the big risk that a lot of people highlight and shout about to make sure that people don't fall in a trap of some of the ETFs that favor distribution of dividends over the price, and ensure that people don't fall into decay. And I agree with this approach, and I try to find for myself a balance between dividend increase, dividend yield, and share price. One that I have chosen, for example, is the iShares Emerging Market Dividend ETF. The fund size is about 700 million euros as of July 2025. It was created in 2011, which is a good sign. Usually, when a fund is more than 10 years old, it shows that it is quite robust. The price appreciation has not been outstanding since 2011, because at the peak it was only up 75%, knowing that the Nasdaq, SPY, and all the European markets have increased quite substantially and way more than 75% from the lowest levels of the financial crisis in 2011 to nowadays. But the good thing about this ETF is that it has a pretty high yield of 7.81%. So this is an example of a ETF that I am invested in. It's called EUNY. And to show you basically the interest over time, here's the dividend growth of the EUNY ETF. So you see that it's quite solid. You have some years where, for example, 2016, 2017, where the dividend paid was lower than the year before. But on average, over the past 5 years, 10 years, the dividend increase is about 5%. So when you compound a dividend yield of 7 to 10%, depending on the share price, and an increase of about 5% on CAGR over the past 10 years, it becomes very interesting to invest in such dividends because it can accelerate the compounding effect and the growth of our portfolio. You have other ETFs. You see, for example, the iShares US High Yield Corporate Bond ETF. It's another type of instrument. So you're not buying ETFs that invest in stocks, but in ETFs that invest in corporate bonds and distribute a dividend of about 7% in this case. So here it is, just a few examples. Another one that I'm invested in is called JGPI. It's quite a quite recent one, dating back to November 2023, with a fund size of about 1 billion euros, so already substantial size by JP Morgan. Nice increase in 2024 up to 25% and a dividend yield of 8.17%. And if I just show you the increase in the dividend, it's just to show you here that sometimes some funds are so new that the data is not yet available. Basically, the dividends have been quite healthy over the past year and a half. So moving on, I will show you my portfolio as of today. So the value of my dividend investments is at $86,500 or so. I like to look at data in dollars because for me that is dollar is the global currency and the euro is a regional currency with a lot of value, but it doesn't represent to me the potential of the economy in the world. So I look at my data in US dollars. And what you can see is that in terms of dividend distribution, the company that pays me the most is still Realty Income because I have faith in the real estate market in the US, and Realty Income has also expanded to other markets. So very confident about this company. But then after that, you see that we have JGPI that is yielding to me $400 every year, EUNY that I showed you earlier. Another one that's very interesting is called EHDV. And what I like about this ETF is that it balances a very high dividend with low volatility. So you see from the get-go, the fund managers have a clear strategy of delivering a high dividend, but still protecting the investment from high volatility. And the impact is still very good. So you see here that the dividend yield is about 6.36% as of today, with a dividend growth over the past year of 28% and of 18.7% over the past 5 years. So very interesting. I will keep injecting money into this one because it looks like it has a very good balance between dividend growth and share price. And I also have, of course, a couple other examples, TDIV, EXSH, which do not have a covered call strategy, so it's less risky than some like JGPI, for example. And I always have my stocks, so my my blue chip stocks like the Pepsis, the Starbucks, the McDonald's, the T. Rowe Price, the Novo Nordisk that is very active in news lately because of its negative earnings reports and its legal troubles with companies like Hims. But there you go, portfolio that I'm trying to balance. I try not to have more than, in terms of investment, more than 25% into one asset. It's already a lot, and my goal over time should be no more than 5 to 7% into each asset. But at the same time, I don't want to dilute my portfolio too much. I'm trying to keep my holdings between 15 and 20 big max, so that I can really adjust my portfolio and benefit from higher snowball at the stock level and not dilute my investments into too many stocks or ETFs. In terms of income per month, I have reached officially $338. So I'm getting closer to my goal of $500 a month that I hope I can reach by next spring or next summer. And my next goal will be to reach 1,000, let's say 8 to 12 months after that. And then let the compounding effect increase and accelerate. Then the dividend yield as of today, because the market have been decreasing a little bit, is 4.7% with an dividend growth over the past 5 years of 7.5%. So if I just take you to Portsido, where you can go at the bottom of the page and click on dividend calculator, you can simulate what your dividend income is going to be in X amount of years, and in this case in 20 years. So I will plot in my parameters. I'll just do $87,000. My goal over time is to inject $3,500 monthly using my paychecks, my bonuses, and also my profits from the covered calls that I sell, also some gains that I make in trading or some investments in growth stocks. I will plot the dividend yield. I'll leave it at 4.6. Annual price growth, I will leave at 7%. The increase in the dividend, I will keep it at 7.5. Pretty reasonable maximum dividend yield at 10%, which is already very optimistic, and a dividend tax rate of 30% because of where I am based. And that gives us basically an income as of today of 4,000 a year that will already jump all the way to 10,000 a year in about 3 years. This will be an amazing milestone for me in about 2 to 3 years, and I will reach my goal of 50,000 net of tax a year in about 10 years. So this is my projection. This projection, of course, keeps evolving as this number here, which is the starting balance, evolves. And I will keep showing you over time how this projection is evolving and when, if I am getting to my goal earlier than expected. So ideally for me, I would love to reach the 5,000 net a month in about 5 years or 6 years when I turn 40. And I will keep you posted on the progress. So thank you for watching this video. I hope you find it useful. I hope you know a little bit more now about how to find your high yield dividend ETFs if you are based in Europe. If you are based in the US, there are plenty of research websites where you can find this information pretty easily. And the logic that I wanted to show you today is basically that there is a balance to find between the dividend yield, dividend growth, but also the price of the ETF that you buy so that the net asset value over time does not harm your portfolio too much. So thank you for watching, and I hope to see you in the next one.